Welcome to Commodities, and here we're looking at the gold chart, a weekly chart here, and essentially we're looking at a large triangle pattern as a wave 4 across the 1300, and as you can see it's still in play. We're looking at wave D breaking lower towards the 1200 there. But also need to be mindful too, for the people that understand Elliott, is that from this B wave here, this move up through here, it can be counted as a 5-wave structure as well. So a move up in 5 waves, pulling back 50-60%, and then moving up further. So if the 1300 ever became the tested support, then I'd definitely be looking on that side with it. However, we'll stay with the triangle pattern because this move down through here in wave B here is in a clean 3-wave structure. So it tends to lead the pattern to being a triangle pattern. So also in this little consolidation here under the 1300 here, we've also got a triangle in there, and possibly a series of triangles here that we're looking at. Triangles essentially are in 3 waves, and each one of these moves across here is in 3 waves. So technically it should break to the downside. We were looking for another little sort of move up through to here. That's been completed now. So it should be interesting if we see this move to the downside. If we can get a move under 1290, then we can, or just drill in here. If we can get a move under 1290 this time around here, then this move up here I can count in as being in 3 waves as well, basically an A and a B, and 5 waves up here for the C wave. So I'd need to get an overlapping wave structure from here to do that. So the 1290 as resistance is what we're looking for further downside. So you see that as resistance, then look to short. If you're short already, well then you should have your stop at 1307. So we've been saved by having that stop at the right price each time through here. We are getting lower highs here, but at the same time in the bigger picture we're also getting higher lows here as well. So we are working into sort of a diminishing price point, and the market will move quite quickly from that when it's ready, from this larger triangle pattern. So it's good to have your orders in and your stops in, and yeah, let's see how it goes. The copper market is well, in very simple terms, if the 310 is breached again from this point here, then we've got a top in play. But as it stands, it's further to the upside. This wave 4 here can be placed here, and still looking for a wave 5 up through to here, because this counts nicely. Well, this one here, this move up through here, it spiked a little bit, so it's a little bit difficult to count, but the best count for it is in 3 waves here. So it's probably the B wave with the C wave in 5 waves coming through to here. Now, this is why we've got to be a little bit careful here, because if this is an A and a B and a C, yes, fine, we'll make new highs above here, and the confirmation for that is getting support on the 315, which is the midpoint, which is the balance line for this correction here. Will shift the weight to the upside. But if we do get a move down through to here, down past here, then we'll get a larger move down from this point as well, and it's likely that it can follow gold. So this would be from the top here. If this 5th wave is in here, then this in here would be the little A, B, C into here, and the 5th wave to here. It's just that this doesn't count very well as a 5th wave, and that's why I'm looking at this being the A wave, the B wave, and the C wave here. But if I'm wrong, then this will be the 5 waves down through to here, an A and a B and a C back to this area here, failing from this, and then moving down from that point there. So 315 as support is upside. A breach of 310 is a large move to the downside, and it's helpful because well, base metals and precious metals can have a bit of a relationship there. This is also important for the materials sector. US BHP was up 1% overnight, so it's positive on that side. But this will be a telling story here. The oil market has still got further to the upside. It's just doing a correction across the 104 in 3 waves. Once that's completed, a little wave 4 there, we'll see wave 5 of 3 push up to 105. So we're basically just trading support and resistance from the 102 to the 103 and so forth, and we'll do that again as well. And yeah, so look, next time 104 becomes the support, gain a position there, and then also through group 1 as well, which is group 1 is 1, 2 and 3, in this case 10, 20 and 30, 104, 10, 104, 20 and 104, 30. Support on top of 30 straight away sets a target at 50, the midpoint, and if the 50 becomes support, then the weight is shifted to 105 at that stage. Also keep an eye on Brent too at 110, because it will fluctuate there and have bearing on this 104 here. The gas market is weak and will make new lows in towards the 420 area through here. There will be a bounce off the 430 here. It's failed to gain support up through here. These are just the retracement levels we're looking for. And we didn't get a 5-wave structure up here. We'd only got the 3 waves. If we'd gained support on the 450 and made a new high to trigger the trade in, then that's fine. But it's just not the case. We didn't have that confirmation either in support or wave structure. So we need to look at this as being a wave 4 here. It's a little bit high at the 50% retracement level of this wave 2 move through to here. But we'll just run with that for the time being, and we'll start looking at a 5-wave structure to the downside, so into the 420 area here. But there will be support here for that. There is a lot of support at the 420 as well, so it may not make it to the 420. Right, the grains. We've seen soybeans move higher. So just bringing this into the fold a little bit here. So we've been looking at this pattern through here, and it's still possibly corrective as well, but because this here had made a new high over the previous high of around 1520 odd, then it's putting it into a bullish mode. So we would count this up as wave 1 here, an A and a B and a C for wave 2, and then we've got wave 3 unfolding now. And this wave 3 here will have 5 waves in it, the 1, the 2, the 3. The wave 4 pullback here, the 38.2%, is roughly the 1510 here. So that's where we can expect it to come back to, and then we'll have a push up to wave 4 and get a bit sort of, complicated and so forth. So expect something there. And then wave 5 will be roughly up into this area here, trying to find support eventually onto the 1530, and the 1530 is the top of group 1, so support on top of 1530 basically separates the orders from the 1500, and then we'll see further upside from there. If we get a move down through here, overlapping top of wave 1 here, then we know that it's a corrective move. And but I think it's also important to commodities overlap a little bit, so don't put the stop at 14.99 or something. We'll keep the stop at 14.76 or something out of the way. If you're buying, you may already be in here on the break, or you might be scaling in through 10, 20 and 30 through here. Anyway, this is, it may just come back and test the 1500 as well. I mean, it's logically, it's logic to do that. Anyway, just see sort of how you go. But you really want to gain a position as close to the 1500 as possible. And then once you see some movement to the upside, then build a position or two every 10 points. Right. the wheat market, we're looking for it to move down into the 650 here. And if we've got soybeans moving to the upside, well, then it's probably not long before we're going to see wheat and corn sort of follow as well. So we're likely to see a bounce off the 650 here, as we mentioned before. I think it's also the 50% retracement level of wave 1 here. Up. Be close anyway. I'm probably not. I think that's corn actually. But anyway, we've had a decent retracement on this. The daily chart is definitely oversold, so we can see this snapping back. This structure in here is a little bit tricky to read, and yes, it can come down here further. So what we're going to do is that we'll look for support on within group 2 here. So the 665. The 672 and the 68, these tested support on these levels would create the buying for the upside. So yeah, just keep an eye on that if that interests you. But this could certainly move down. Don't sort of buy, don't try and buy on the bottom. You need some sort of evidence that the market is moving up, and the 665 would be, can be part of that, and definitely the 672. The corn market is a bit the same as well. This is the 50% retracement level on this one. So, there's a couple of ways to count all this. This is the preferred count here, where we've got wave 1 up here, and we're looking for an A and a B and a C here for wave 2. However, we need to be a little bit mindful, because at the end of the day, what we were looking for some sort of correction across the 500, okay? And we've basically got that, haven't we? We've got, it's moved up, and it's had its correction. So, it's possible that wave 2 can be on this low through here, if it's going to move up from this area through here. So, this would be counted in terms of an A wave and a B wave and a C wave, or possibly an A, B, and C to here as well. But this is the best count. But if soybeans are going to run higher and corn and wheat are going to follow, then, we need to make a bit of an effort and look for, to gain a few small points in here, because if we do move up from here, we'll be looking to move right up through here, taking this high out here. So to get 1 or 2 positions below the 500 here, it is risk, but if it pays off, then we can build on top of here as well. And then we've got, if we've got a little bit of under our belts here, that means we can, apply a bit more positions through this levels up here, especially above the 520. So let's see how that goes. And so I would suggest that on the 480 here, if the 480 became a nice support, or you've seen a strong move up through there, then we'll glean a position there. But otherwise, this market would be looking at 1, 2, 3, 4 from this point, and then moving down further. But if it gets support on 480, because the others are going to move up, and the daily chart is definitely oversold as well, so that can snap back. So we can have buying for soybeans, wheat, and corn, all of those. So, maybe hedge your bets a little bit and have a little bit in each or something. You don't need much, even just one contract, or depending on your account size, whatever. But basically, we're just trying to get a position or 2 into the lows of wheat and corn, and we'll see how they go. The coffee market, there's no strategy just here yet. Look, we'll probably see a bounce off the 180 here, but as I mentioned before, we're not interested in getting into this market unless we have 200 as the support. You could risk and buy early here as well, but look, I don't know if this is just finished yet, because this has got a 5-wave structure to the downside, so we should get 3 waves back to the B wave, and then another C wave down through to here. So, nothing really cooking here at all. The sugar market is also working lower as well. So this daily trend line here is going to offer some support here at the 1730 and the 1720. So we'd expect to see a bounce off these lows through here. Because this market is, from this low here, we're expecting a new high above here, and it just hasn't produce that, and there's a couple of options that we need to sort of look at for that. And one is wave 5 is in place here, and it just hasn't made a new high here. It did produce 5 waves here, so it could be called in there, and we could be looking at a larger ABC correction. Otherwise, this move up here is just wave 1, and this is still wave 2 here, and that's possible until that low there is taken out. So we may see a move up through here. If we do see 5 waves up here, well, then we will re-enter a small position with the view of adding above the 18. But we also need to be mindful as well is that, if we do get a bounce off here, we get stuck under this trend line here and it can't get up from that, well, then we'll be looking at shorting from there, because a move through here would normally see a retest of the trend line through here. So in a way, it'd be good if we get a break of that low there, move down, come back up and retest that trend line, then we'll look to short it from this area through here. The orange juice, daily chart here, just pointing out the fact that the 160 is the it's where all the resistance starts, isn't it? From 160 and above here, and also with this trend line as well. The move up here is in 3 waves so far. It's not in 5 waves. So if it was in 5 waves, then I knew we'll get another 5 waves, but that's not the case at this stage. This is still a corrective move up through here and can fail at the 160 or above the 160 here. So, we can't do anything about this either. So what we do need to do is just wait, and if we get a really nice support on the 160 here, a little bit sort of like this sort of stuff here, but over here nice, it's tested it a few times and so forth, we can move in from that point. But this is all the resistance and the supply all through 160 to 163 here. We just need to be, we'll just watch it for a little while. I mean, the positive thing about this is that we've got this move down through here, which is in 3 waves. We were looking for this to complete with 5 waves down here in terms of 1, 2, 3, 4 to here and 5 to here. Now the wave 4's gone a little bit sort of high here, but this is still in 3 waves here. So we can't call this, because the structure's not clean all the way down, we can't put that there as wave C just yet as being complete, an A and a B and a C here. We just can't do that just yet. So we just need more evidence that there will be a move up, and we're not going to move into a trap here. Alrighty, just the other little point here is the US dollar here is sticking to the 80 here. We know that the US dollar is moving up. We're just wondering how far it would actually pull back first before it went up. So it's possible that it's going to move up from here, and that would be the case if it took that high out here, because this here can still be a little ABC for the A wave, an A and a B and a C for the B wave here in 3 waves, and then this can work lower. So a move above this little high here would tell you that there's going to be more structure coming in up here, and of course that would apply pressure on some of the commodities. All right, thank you.